All right, what's up, guys? Hey, Russ, SP, AJ, Mirza, Andrew. All right, folks, I'm not going to keep you too long. I've got a hot date. And by a hot date, I mean I got to feed my dog. So we'll jump in, we'll keep it short and sweet. And tomorrow's Thursday, so we're live tomorrow. Live in action. But all right, we finally got a wee bit of a sell off. First things first, did anything really change? As spooky as it might seem, not really. All right, we got all the things we care about as far as momentum, structure, moving averages, when we're trying to figure out the path of least resistance. And we turn that into the big three score. Monthly charts are 10 out of 10. They're still perfect. Weekly charts are still perfect. The daily charts are still perfect. Yeah, the 1 hour, the 30 minute, the 15 minute, they get a little bit tossed around. And to be expected when you're pulling back to the 21 EMA. And like we talked about over the weekend, in a bullish market, assuming the top is not in forever, there's a lot of beauty in that pullback. The best way you can rob yourself of that beauty, the market hits 2.5 ATR, the market hits 3 ATR, and you just keep pushing the envelope. Getting aggressively long, you're buying the out-the-money calls. The thing of it is, the further we go from the 21 EMA, the move back down, it's not what I would call a gentleman's rally. We're not pulling back in a nice, slow, orderly fashion. The market's not giving you too much time to take off your longs and get short. It's a little bit more you take the stairs up and you jump off the balcony on the way down. If you're caught in it, it sucks. If you're not caught in it, I think you see it for what it's worth. The ebbs and flows of the market. Off the 21, gets a little bit too cooked at some point. We've got to pull back. And one thing that market participants love to do, we love to point fingers. Oh, it's the Fed's fault. It's Jerome Powell's fault. F you, Jerome. Or it's AMD earnings fault. It's Microsoft's fault. I think we should think in terms of probabilities. Maybe the Fed was a catalyst. Maybe earnings was a catalyst. Probabilities-wise, we reached a point. On the weekly charts and the daily charts, we needed a pullback. That going up, up, up every single day kind of action, in the grand scheme of things, not too sustainable. So, y'all know the drill from here. Wait for things to come in. The QQQ, you're pretty much at the 21. You might go a little bit lower and get the official smooch. And then the spiders. Are we on top of it? Not quite. We're about 20, 25 bucks shy. So essentially, everything's pretty much come back to the buy zone. You've got names like Microsoft. Back to a 21. Names like Amazon. Granted, earnings tomorrow, but you're back at your 21. And AMD. A lot of things have come back to support. So the drill from here is we're just waiting on lower time frame triggers. We might be at the 21 EMA, we might be at the 50 SMA. Whatever the level, whatever the buy zone is, we're not going to blindly jump in assuming things are going to hold and assuming we're going to turn the corner and go higher. It's got to fit that template. So, start with the QQQ first. Mama, market first. I don't care if we're $1 away from the 21. I don't care if we're dead on top of the 21. If the lower time frame signals look like that, 1 hour sell signal, 30 minute, 15 minute, 5 minute, we can't buy it yet. We've never seen a rally off the 21 with lower time frame sell signals. What we're going to wait for is the opposite. Let them bring it down. Try to let the dust settle. If we're getting fresh 30-minute hourly buy signals and nothing is changed, meaning the weekly chart is bullish, the daily chart is bullish, at that point we jump in and we get long. What I would like to see Not that the market cares, but what I would like to see, if things can just chill out for a few days, take a bit of a breather, we're probably going to get brand new daily squeezes. And I happen to think that's an awesome thing. So QQQ pulls back, and you chop for a bit. You might go a little bit lower. 2, 3, 4 days later, you get yourself a brand new daily squeeze. From there, it's just the same trade as always. Squeeze at the 21 EMA, lower time frame triggers, and off you go. So yeah, that's pretty much it. You keep pushing the envelope, you keep getting long. And again, here's the thing. If you're getting long with 1% of your account, and then you wake up to a big pullback, not a big deal. But if I've got 5% of my account in NVIDIA calls, and we hold on to our Google trade, we got 3% over there, I've got 4% in Tesla, then the pullback into the buy zone, it can definitely sting. It can definitely sting. I'm not going to assume we hold up here, but I am happy that we're back home at that 21 EMA. So NVIDIA we'll keep an eye on, AMD, Microsoft, and I'm playing around with the scans here. And I figured after a day like today you might appreciate this. If we scan for stocks in the market with a big 3 score better than 8, meaning just in plain English, they're really bullish. Even after a day like today, check them out. Now, for what it's worth, if this begins to change, then it's a different situation. But Microsoft, it might be down 3% today. The daily chart grades out perfectly. All right, the translation is I want to buy that dip. What is it pulling back into? Really good structure, good momentum. It's in an uptrend. What do I not want to buy the dip in? Tesla. Tesla's a -6. Not going to touch that with a 10-foot pole, nor an 11-foot pole. But all things we could look to buy the dip in. When we get the trigger, Microsoft, Amazon, NVIDIA, Meta, Berkshire, Lilly, TSM, Broadcom, Walmart. Most importantly, the S&P 500. You lose mama market, you lose most things. Adobe, ABBV, CRM, Netflix. That one's of interest. Verizon, Qualcomm, QQQ, AMAT, Uber. And as you know, I'm not going to trade most of these. But a little bit more up my alley. QQQ still in good shape. The S&Ps are still in good shape. I can look to buy a dip in Broadcom. I can look to buy a dip in Meta, NVIDIA, Amazon, Microsoft. I shall show you the weekly charts. We got a few heavy hitters over here. Microsoft, Google, NVIDIA, Meta. I might have ran this on the weekly twice. Excuse me. No, actually, no, it's all the same names. Yeah. They all look good on a weekly. They all look good on the daily. Until that changes, you want to buy that dip. When you get your lower time frame trigger. So any questions, anything you want to take a look at quickly, I'm here for it. Otherwise, I'm looking forward to tomorrow. See what we can get. I'll definitely be watching the futures tonight. There's about another $20 between the current price and that 21 EMA. We'll see if there's a trade there or not. But as a recap, it all sounds a bit spooky on paper. I'll read off a few numbers here, and a few of them are quite a doozy. Moneymakers. QQQ down 2%. S&P's down 1.5%. Amazon down 2.5%. Microsoft down 2.5. Meta and AMD down 2.5. Nvidia down 2. Apple down 2. I'm not sure who Netflix is trying to impress. Netflix was green. Google down closer to 8%. Earnings, of course. And because the sky is blue and today's a day that ends in Y, Tesla's also down. If we get to the point where the pullback is changing the 4-hour scores, they're breaking down, they're going negative. If we get to the point where the daily scores start to shift, then it's a different situation. But from a monthly down to a daily chart, most things are pretty much still as bullish as possible. So the art of buying the pullback is, what am I buying it into? Am I buying it into an uptrend? Am I buying it into a strong market? It's a path of least resistance thing. Am I buying into a setup where the path of least resistance is to the upside? Like most of the market, or Tesla. Tesla, not looking too hot. But all right, guys, I'll wrap up the recording here. Get that ready for the folks at home.